the pending home sales data, which came out at 7 a.m. We got a lot of stuff to talk about housing. We got a lot of stuff to talk about the economy, the big boys, what is going on. But first and foremost, I want to tell you, I hope you enjoyed that presentation from April Crosley yesterday. April Crosley, Lazy Girl REI, gave the school community yesterday an amazing discussion talking about the hustle and grind phase, transitioning into something else. If you're part of the school community and you missed that talk live, it is already loaded and ready for you to watch. Just go to the classroom underneath the thumbnail that says special guest, and you will see a growing list of millionaires giving back to you. So April, if you ever see this, thank you so much. If you follow April, send her a note, say thank you for coming out to one rental at a time. Well, let's get into it. Let's talk about pending home sales. Pending home sales, if you don't recall, had a nasty miss last month. It was down negative 7.7%. Folks, if you don't recall, that's when interest rates went to about 7.5%. And again, buyers pulled back. Rates came in a little bit, but we are still standing above 7%. Again, I think the psychological threshold to unleash demand is 6.7. Why 6.7? Frankly, we haven't been below 6.7 in about 13 or 14 months. And consumers are predictable. They will see that 6.7 be something we haven't seen in over a year and go, I'm interested. That's a deal. All consumers want is a deal. And 7%, 7.5% is not a deal. So again, pending home sales down 7.7% last month. They were expected to be up 0.5%, and just released, they were down negative 2.1%. Think about that. We were down 7%, and then we went even lower. Pending home sales lower. The real estate market is frozen. It is broken. There's a lot of stuff going on in the house, just in the real estate market, right? I'm going to talk real estate market, which will include housing and multifamily, everything with shelter. So we're not going to talk office or warehouses or data centers. We're going to talk where people live. I just wrote down a list of 7 or 8 things that are happening right now that will play out over different lags, right? One of the things that hopefully you're starting to understand about real estate is it moves slower than other asset classes. For example, something we've been talking about for 3 years, the housing market is broken. If you don't know what that means, it means that we've basically taken a critical part of the housing market called the move-up buyer out of the market. They're locked in, they're not trading. Frankly, most of them, or many of them, couldn't even afford their house today at today's interest rates. So they're not selling, they're not trading, they're not moving up, which is keeping transactions low. Again, pending home sales down 7.7, now down 2.1. That's a kick in the shins. So again, the move-up buyer is broken. It's going to be broken for a while, right? One of the things that we have learned, because we look at the 54-year spreadsheet, again, free on my website, onerentalatatime.com, is transactions, aka the move-up buyer, can be broken for years. The last time we were here, and yes, we have been here before, when interest rates rose, we've been here before, look at the early 80s, it took over a decade. It took over a decade for the move-up buyer and equity build and all of these other things to unlock that demand. So it's not going to be quick, the transaction business in residential real estate. We can't, and we must acknowledge that affordability today is horrible. When you take income, price, and interest rates, affordability is nearing a record low. 1981 is still the record low based on what I see, but we are close, right? We are close to the worst affordability ever. Again, that will not be fixed quickly. Affordability can be fixed with one of 3 things, but likely a combination of all 3. How do you fix affordability? You lower rates. You raise income. You lower prices. Again, this, like transactions, like the move-up buyer, affordability will not be fixed quickly. This is going to be over years, unfortunately. How about supply? Again, something that I'm harping on, I'm praying on, whatever I can do to make happen is that builders focus on entry-level housing. Again, in my world, the entry-level house or the total average square foot of all the new supply needs to shrink. Last year, if memory serves, we shrank about 3%. I want it to shrink by 5, 6, 7, 8%. I want a disproportionate supply of new inventory to be entry level. Frankly, the problem is today, it's not profitable. There are too many rules and regulations, the financing, the big boys. It's just this, the numbers don't work in mass. So again, we are already seeing, we just saw yesterday, new homes. They're pulling permits. They're slowing down. If they can't sell them or they're building the wrong stuff, they're going to not build them. So just lots of stuff not going right for residential. How about the commercial, right? We're talking multifamily. You know, this is a particular segment that I am interested in getting into. Again, we did it in 06, 07. I look forward to the opportunity to do it again. What's going on there? Well, commercial banks, the largest lender of the kind of small multifamily, the 5 to 50s, right? They don't qualify for Fannie Freddie debt. It's always, or at least most of the time, commercial banks. They've pulled back. Their balance sheets, many of them are impaired. What does that mean? That means they have loans on the books that frankly aren't worth what those loans are. And they're doing extend and pretend. This is going to be a problem. It's something that's going to boil up and eventually have to be dealt with. Probably in 2025, we're going to see that happen. But now let's flip the script to the big boys. I don't know if you saw this or heard this yesterday. We talked about KKR. We've talked about Blackstone, Jonathan Gray calling the bottom. We talked about Grant Cardone buying stuff for cash. We're talking about Ken McElroy, being a speedboat moving around. What are they telling us? Well, I think what they're telling us is Class A is safe. They're looking at getting in now. They don't need to tick the bottom, right? If they miss a couple of percentage points at the bottom, they're not concerned. But the big boys are active. But don't get that twisted. Class A is usually owned by the institutions, the insurance companies, all of that. What we need is Class B and Class C to kind of reset, and that has not happened. Class B and Class C, that's where the retail investors are, right? That's not where the big boys play. They don't play in Class B and Class C very often. And that stuff has not been reset. That asset is not retrading. I think it was Ken McElroy a couple of months ago talked about Class A resetting about 20 to 22%, but Class B and Class C, they haven't been repriced because nothing is trading. So we have a lot of pain ahead of us. So again, lots of stuff going on. The whole key to this wrap up, what I want you to understand is any fix to the real estate market won't be quick. But what can you and I do about it? Well, the beauty of a real estate market that is slow is it means you and I can have a buy box, have our daily discipline, keep looking each and every day, keep writing disrespectful, aggressive, whatever you want to call it, offers, and then eventually, over time, you will win. The big thing I want you to understand, and I'm already seeing this, is it doesn't always have to be about price. It can be about terms. I want to bring you inside a conversation I had yesterday with Matt, the mortgage guy. Matt, the mortgage guy, obviously a Wednesday expert, a contributor to the channel. He's doing a Friday session in school. He is looking at another investment. He found a home, and I'm going to go from memory. If you want to get the whole conversation, it's in our discussion that was posted yesterday. But essentially, he found a house that had been days on market at 88 days. In his market, his buy box, that is extreme. That particular house has had 3 price cuts. So, in my world, That's a signal. What is it a signal of? The seller wants to sell, right? I would argue the seller needs to sell. So what did Matt do? Matt reached out to the agent, the listing agent, and asked, hey, any chance that seller might want to do an owner carry? Now, in this case, we're not sure if it's going to work out, but the logic is what I want you to understand. Long days on market, several price cuts. Figure out if the owner owns it free and clear. If they own it free and clear, you know what, folks? You can pay a little more and get an interest rate. Frankly, if I was working on a deal like that, I would say, congratulations, Mr. Seller. I can give you yesterday's price if you give me yesterday's interest rates. Because at the end of the day, folks, I want to put together a deal that cash flows today. I want the debt at a minimum to be 10 years fixed, but I would go for 30 years fixed. Again, a seller who has multiple price reductions in a hot market that's 88 days, I am going to get all kinds of greedy. I am going to go for an awesome deal. And this is what we talk about in school. This is what we talk about in the course, how to get started one rental at a time. It is the focus, the daily discipline. Hopefully you have purchased the course or joined school. If you do buy the course, $399, I will give you the Vegas event for free. It's $200. But yes, this is the time. We're finally in a time after 3, maybe even 4 years, where doing the work works, right? We're rewarded for our efforts. Unfortunately, 2021, 22, much of 2023, the market was too fast. But now it is slowing down and we are going to win. I am so excited about that. I don't know if you heard this, but 31 of our largest banks all passed what is called the stress test. Man, I want you to look at these numbers and just think about how bad the economy would be if this happened. Unemployment goes to 10%. Commercial real estate, all of it collapses 40%. Single family homes drop 36%. According to the Fed's numbers, the biggest 31 banks would suffer a $685 billion loss. Let's call it $700 billion loss, and they still would be able to meet their capital reserves. That is pretty wild to think about. It should be noted that JP Morgan issued a press release last night saying not so fast. JP Morgan actually said, we think the Fed miscalculated. And actually, our losses would be much worse. So not really sure what that's going to mean. The Fed hasn't had a chance to reply. But yeah, when somebody gives you a test, they give you a good grade, and you go, no, I don't think we deserve that grade. I'm not really sure to think about that, but that did happen. How about some earnings? Looks like Micron did beat top line and bottom line, but did not raise. They gave a weak guidance. I suspect their stock will be hit this morning. Levi Strauss, the jeans maker, missed revenue, warned that consumers are generally cautious and are not spending on discretionary items. Not to be outdone, we also got earnings from Walgreens, where they beat the top line, missed earnings, but slashed their profit guidance. Folks, a challenging consumer environment. I think we have found out that the consumer is pulling back. They're broken. They're saying no mas. I do think we have, I don't know, call it 20% of consumers, right? The top, 20% still spending on discretionary items, taking the trips. Some people are YOLOing and living on credit. But yeah, it looks like when people are pulling back on jeans and Walgreens, that we could be in for that recession, that long called for recession. It is Thursday, so we would be remiss if we didn't talk about the weekly unemployment claims. This is your and I's weekly heartbeat into what is going on in the jobs market. Last was 239. Estimates were 236. Actuals were 233. So it definitely feels like we've taken a tick up. We're now 3 weeks in a row above 230. We were below 220 for a long time. So we've seen some give on unemployment, but it is not racing higher. I would argue we probably took the stairs up We are not, at least currently, on the elevator up, if you know what I mean. So again, lots and lots of stuff going on there. One more time, we've got a lot of stuff coming on the school community. Today's Thursday. You have the opportunity to watch Himalayan talk about finding good tenants in school. Tomorrow, Friday, you've got Matt the Mortgage Guy talking about mortgage. Saturday, you've got Small Business Summit with Bo. Sunday, you have the opportunity to just ask me random questions. I will be going live in school on Sunday. And Monday, thanks to Frank, the old guy, REI, you are going to have your first accountability group in the evening. If you're not a part of school, you need to join school just to be a part of the accountability group. If you're in school, tell us your buy box. Tell us what's going on. Interact with other folks. Part of the school community is not only all the free courses like creative financing, 10-week boot camp, the challenge for your kids. It's not only about all the millionaire interviews that you get access to every month. It's about the entire community. We're currently over 160 students in school. My goal is to get that to 1,000. And when we get there, you're just going to see all of the community going forward. Something we saw in April's conversation, something you saw Matt and Dion and I talk about yesterday, is you got to be in the right rooms. You got to be around the right people. If you want to be physically fit, be around those folks. If you want to be a millionaire, be around millionaires. You want to be a real estate investor, be around other real estate investors, folks. Yesterday, we put out a video, Matt, Dion, and I talking about how we would have done it faster. And again, I can't tell you with any straighter face, the thing that I wish I had done is get in other rooms and other groups. You don't have to do it alone. Doing it alone does work, but it's a lot of work, a lot of stress, and frankly, it is slow. And then finally, folks, we got another card going out. Boy, I love sending these out. This one goes to Joanna. Joanna, congratulations on your next deal. Your card will be going out in the mail today. Folks, join school. Buy the course, How to Get Started One Rental at a Time. It is our time to do the work and see the rewards. Folks, take care. Later.